I'd like to welcome you on behalf of the NFMA to our webinar titled Fdta 101. My name is John Cefalio. I'm a client portfolio manager at Northern Trust. I'm also the vice chairman of the NFMA for 2023. Before we get started on the webinar, I would like to briefly thank our sponsors. Our Diamond Plus sponsors are Assured Guarantee, Build America Mutual, Fitch Ratings, Greenberg, Mintz, and S&P. Our Diamond sponsors are Arndt Fox, Ballard Spahr, Investor Tools, KBRA, Moody's, MuniPro, and Refinitiv. I also like to let you know about upcoming NFMA events. As I think you know, this Fdta webinar is a two-parter, and the second part will be on August 3rd. You can register right now on the NFMA website. Upcoming events include October 12th and 13th is our advanced seminar on transportation here in Chicago. November 16th and 17th is the annual intro class, the Introduction to Municipal Bond Credit Analysis, to be held in Philadelphia. Next winter, date to be named, we'll have an advanced seminar on high yield credit. And then April 30th to May 3rd of 2024, the annual NFMA annual conference will be held in beautiful Philadelphia. All of these events, you'll be able to register soon on the NFMA website, so keep an eye there for registration information and further details. Right now, I'd like to introduce our moderator who will get us started. Liz Sweeney is our moderator today. Liz is a founder of Nutshell Associates, a public finance consulting and municipal advisory firm. She was previously a member of the Standard Government Reporting Work Group, a volunteer collaborative effort to improve the efficiency and quality of federal, state, and local government financial reporting. Liz has also previously been a managing director at S&P Global Ratings. Liz is currently a board member of the MSRB. She's also been a board member of the University of Maryland's medical system. Liz holds an MBA from NYU's Stern School and a BS from Georgetown. So with that, let me turn it over to Liz. Thank you very much for moderating today, Liz.
Great, thanks, John. And thank you to the NFMA for putting this together, and especially for giving me the easy job. So I just have to introduce the smart people. So John did mention that I'm a board member of the MSRB, so now is the time that I'll say that my views are my own and don't necessarily represent those of the MSRB or its board. What you have on the screen today are today's topics, and really what our goal is to do is try to kind of demystify the Fdta. It can be a little bit intimidating. There's a lot of language in there that is new for us in the muni market. And so we're going to try to give you a sense for what it really means and you know what all those terms are for. And I think all this is really important for us in the user community, because I think how useful the Fdta is for us, how much it enhances transparency, or how much it changes our data analytics, is very much going to be dependent on how we as a community interact with the development and implementation of the Fdta. So whether you're participating in that process as part of the NFMA or through your company or as an individual or all of the above, I think it's really important that the user community, that their voices are heard as the law develops. So I'm going to introduce our two speakers now. They'll each speak for about 15 minutes, and then we'll take Q&A. So type your questions into the Q&A box as the questions come to you, and we will take as many of them as we can. So our first speaker will be Ernie Lanza. He is a securities attorney at Ballard Spahr. Many of us know Ernie. He's been in the muni market for a very long time. He's a former acting director of the SEC's Office of Municipal Securities, and he was also at the MSRB when Emma was launched. So Ernie really knows this market from both the regulatory framework side as well as the data transparency side. And Ernie and his colleagues collaborated on what I think is the best white paper out there on Fdta that's specific to the muni market. And so I highly recommend, if you haven't seen it, that you take a look for it. It's called Structured Data is Coming to the Municipal Securities Market. What next? Or what now what? So highly recommend that one. And then we'll hear from Michelle Savage, who is Vice President of Communications at XBRL US. And Michelle does a lot of market education about XBRL, which is a non-proprietary open source data standard that's used for business reporting. And in particular, Michelle has really led XBRL US's efforts to convene stakeholders of government reporting to try to demonstrate how data standards might be applied to improve government reporting transparency. So very much germane to the Fdta and its potential application to our securities market. So with that, let me turn it over to you, Ernie.
Great. Thank you, Liz. And thank you, NFMA, and John and Lisa, for inviting us to be here to talk to the folks. I'll be talking to you from a lawyer's, pointy-headed lawyer's perspective. Michelle will then follow with practical and understandable and well-learned understanding of structured data. So I'll start off with some contextual information and some of the issues that kind of arise through the process. We're all here because the Financial Data Transparency Act put out the mandate that the SEC shall adopt data standards for the information submitted to the MSRB. And I think it's important to kind of parse through that a little bit. What they are doing is adopting a data standard, not requirements regarding content of disclosure. A standard, sets out the rules by which you can describe and record the data, but doesn't say this is what information is required to be provided by issuers, obligated persons, and other market participants. It's a matter of how do you present it, how do you make it available to the marketplace in a way that makes it usable for the broader market. Those standards that are to be developed are going to have a series of specifications they need to meet. I'll talk about it in very broad strokes and touch on a couple of points. And again, Michelle will be able to talk about some of the key ones with much greater detail after I shut up. But basically, there's 4 general areas. There's identifier specifications that deal with who you're talking about and who's talking. Technical specifications dealing with how you actually label these things and how do you structure the labeling of the data. Access specification regarding kind of the fact that these standards need to be available for all users in the marketplace without any kind of restrictions. And then standards body specifications, which I'll touch on briefly shortly. Next slide. Basically, the rollout of Fdta will be in 2 phases. There's an initial phase, which on its face has nothing to do with munis and really is a joint rulemaking to be undertaken by the various members of the Financial Stability Oversight Council that was put together in Dodd-Frank after the financial crisis. And what one would expect is a rulemaking process, pretty much similar to what happened with the Volcker Rule, where you had kind of a template set of rules that are adopted by the various agencies to be identical with each other. And so there's that first phase where Treasury, SEC, the various banking regulators, along with the Consumer Finance Protection Bureau and the Credit Union and Housing Finance Agency will together come up with a set of baseline standards for the submission of data that regulated entities, financial entities that make submissions to them would be using. And so that sets the groundwork, the baseline for data standards that the Fdta will expect the various regulators to use. There's a second phase that follows on that, which involves these regulators as well as brings in FINRA as the SRO for the broker-dealer community to then look at your specific submission obligations under your authorities, and then using the joint data standards that are established by these various regulators, adapt those to the specific submission requirements that fall under your jurisdiction. And different regulators have a slightly differently stated set of obligations as to what they need to apply it to. In some cases, for example, the SEC, there are a series of specific sections of the statute that they implement that they need to make sure it applies to. In the case of the MSRB, it is a very broad statement of information submitted to the MSRB, and those MSRB submission standards are to be established by the SEC. And so there's kind of a timeline that's assumed through the Fdta, which is the next slide. And so back in 2022, at December, at the end of the year, the Fdta was enacted as kind of way back in the back of the National Defense Authorization Act that was approved annually. And so that set out a timeline that it wanted the regulators to follow. We've actually hit the first point in that timeline, and there's a slide a little later on, if time permits, I'll touch on it briefly, where the SEC was mandated to put out a report, a semi-annual report, talking about which of its current rules currently use structured data, and then a series of reports of information about costs and benefits of use of structured data, how they use the data for enforcement purposes and for other purposes. And so that report was issued right at the end of June. There's a link later on in the slides to that report. And like I said, I might touch on it a little bit later. So that's already happened. In the following year, through 2024, by the end of 2024, the statute mandates that initial phase 1 joint rulemaking occur, so that if one follows the typical rulemaking process, one would expect sometime early to mid next year that there will be a proposed form of rulemaking by the regulators as a joint rulemaking, followed by a final rule that would occur by the end of the calendar year, on the assumption that the regulators will be able to meet the timeline set out in the statute. That's and December 2024 is the deadline for approving the joint data standards. There is a 2-year window for effectiveness on it, so that effectiveness would roll to 2026 for it to actually be a data standard that it becomes obligatory on the part of users. One thing to keep an eye on it is to see kind of where the time frame is you can look at the regulatory agenda that OIRA puts out every 6 months. Nothing on there yet, but maybe starting next time around, you might start seeing some of the agencies listing this initiative on their calendar to get a better sense of its time frame. 2025 will be a period of time for the various regulators to start digesting those data standards and trying to understand how they'll apply those to their individualized rulemaking and their individualized data submissions, so that in 2026 they will go through their own separate rulemaking process. So presumably each regulator will have their own separate rulemaking to put those standards into place. For purposes of the municipal marketplace, the SEC again would presumably go through a proposing rule, presumably sometime mid-2026, with the final rule at the end of 2026. Now, the MSRB is not mentioned as far as rulemaking is concerned in that process, but certainly since submissions need to go to the MSRB, since systems that'll be digesting the submissions will be the MSRB systems, one would not be surprised to see the MSRB starting up a process to make sure that their systems can meet those standards, and that there's a process to have a smooth transition to actually effectuating it. Then 2027 and forward will be kind of the implementation of the actual standards for the submission process. Next slide, please. So very quickly, I'm not going to go through all of these things. I mentioned again, there are the various specifications for the data standards. The first one is the closest thing to a content standard in the sense that it says you will have some common identifiers that need to be included in there. In other words, who are you? What are you submitting? That type of thing. The one it calls out is identifier for the entity itself, who's making a submission, and or who you're talking about. But there may be other identifiers that need to be part of it. But the rest of them are really a question of structure, process, things like that. Under the technical specifications, I won't go through those. I think Michelle's going to go through those. But I do want to mention the highlighted language there, the underlying regulatory information collection requirements, because those what they're saying here is that the data standards talk about how to present data or information that is required by a rule or form of the agency, and the content is not driven by the data standards, but by those underlying regulatory requirements, and that becomes a relevant issue as we get a little bit later on and talk about the muni marketplace in particular. Access specifications, again, open license. Next slide, please. And then standards body specifications. I'll just mention briefly. You know, there's two prongs there. One is the data standards themselves need to kind of leverage standard processes that exist in the marketplace today. And then the second one, which again is a little bit of a thing to think about in the muni marketplace, is the implementation of applicable accounting and reporting principles. And I think, as many people know, different issuers have different applicable accounting standards, and the question is, how are they applicable and how do they apply in a particular case? And so that's one area we're going to keep an eye on to see how it is the regulators implement this concept of applicable accounting or reporting principles in the muni space. Currently, the SEC is probably the biggest users among these regulators of structured data. They have quite a number of requirements under their corporate and mutual fund and some other existing submission requirements. Most of those require submissions to be made in XBRL, and particularly in inline XBRL. Inline XBRL being a format that allows you in a single document to have both a plain paper-like reading of the document, but also have the data embedded in it, so you can actually use that data in an automated way. And again, Michelle will talk about those going forward. But there are some submissions that are considered to be structured data, but are using, for example, XML as the process by which the data is submitted. And that does go to emphasize the point that the Fdta does not specifically say XBRL will be the way, you know, the standard that's going to be used for purposes of making submissions, that whatever meets those specifications that are set out in the statute are, you know, that's what's required under the Fdta, and that the regulators are free to have other standards besides XBRL. For example, one can very well envision the idea of an online form that gets filled out, and the process of filling out the form and in the backside, the data being put together, that process may itself meet all the specification requirements under the statute, depending on the specific submission process. Next slide, please. So now kind of get down to the municipal area. As mentioned before, there's the joint data standard process. That part of the statute talks about it being applicable to financial entities under the jurisdiction of the covered agency. In the muni world, that's broker-dealers, that's municipal advisors. They're the ones who are subject to regulation. They're regulated entities, and those are entities to whom the data standards will clearly apply. When you get to the second phase, standards by the SEC for submissions to the MSRB, the language, I think very intentionally, does not talk about financial entities, but talks more broadly, information submitted to the MSRB. And for example, for the second phase rulemaking that the banking regulators are required to do, there they are pretty specific about the financial entities that they regulate. But for regulators that have a broader base of submitters, like the MSRB, like the CFPB, which has a much more heterogeneous type of submitters and people they regulate, they kind of forego the financial entities definition and says just information submitted to those agencies. Issuers and obligated persons clearly are not financial entities, at least as generally viewed under the statute, and they certainly are not under the jurisdiction of the MSRB and EMA. But nonetheless, I think the broad perception is that, you know, their filings as well would be subject to the data standards. And then ultimately, and I mentioned this language before, the data standards apply to the underlying regulatory information collection requirements. And so the question is, what are the underlying regulatory requirements that exist or could be made to exist going forward? Because obviously rulemakers can write rules going forward that the data standards would be applying to. Next slide, please. And this gives you kind of a table of at least today, what the various submission requirements are to the MSRB, at least under their rules. So, you know, and I'm not going to go through each one of them here, but I think what's of significance, if you go to the far right column, the submitters, you'll see the vast majority of the required, you know, if you go by rule, submissions apply to broker dealers, in some cases municipal advisors, and it's only really the last one or two line items that really deal with municipal issuers and obligated persons. A lot of the tension under the FDTA, and a lot of, I think, the intent of at least the core intent of these requirements is to reach the financial data primarily in the financial, the ACFRs or the financial statements of the various entities. Worth noting, and I have kind of the arrows there for the primary market disclosures that go to EMA, as well as the continuous disclosures that go to EMA. They have a very different route. They both go through EMA, but broker dealers and underwriters submit the official statements. You have issuers and obligated persons who are making submissions of the continuous disclosures. Those are things to think about as the MSRB goes through implementing this, and as the marketplace starts to understand how these standards might apply, and of course, as the SEC goes about writing its data standards and how they think the MSRB will apply them. The other thing to keep in mind is that, for example, an official statement, unlike the corporate market where you have line item disclosures, the definitions are extremely broad with very little specificity. And so the question becomes, what are those defined regulatory submission obligations, and how do those tie back to the data standards? And then again, the question becomes, how does that work when a intermediary is making a submission as opposed to the issuer making a submission directly? And the same issues apply in the continuous disclosure. There are 16, event disclosures, but they're described in broad by category and don't necessarily have individualized data elements. Of course, structured data can have broader, not data specific submissions, but to the extent that there is an intent to have granular data covered by the structured data, there is some work to be done to make sure there's that ticky-tacky between the underlying regulatory defined submission obligations and the data standards. Next slide, please. And then just a couple of things to think about, and then I'll turn it over to Michelle shortly. Just in the rulemaking process, the regulators do have some degree of flexibility in how they go about doing this. The first 2 points here are available to all the regulators, are not muni specific. Basically, the intent of the Congress is that there would be some credit or some regard given to burdens on smaller entities. The way the statute's written, it talks about regulated entities, and so technically wouldn't cover issuers and obligated persons, but the flexibility of the statute, and I think the intent is that there would be some mindfulness to the burden on small issuers and small obligated persons. All regulators are required to minimize disruptive changes. Certainly, as a matter of principle, is very supportive of the idea of transitioning piece by piece or as appropriate, as opposed to a big drop of a sudden change for everyone in the marketplace to move over into structured data. The last three checkpoints there are muni market specific. So as opposed to the other regulators, the SEC is actually directed to consult with market participants. What does that mean? It doesn't really define it, but certainly going out for comment on proposed rules and getting comment letters back is what would happen anyways. And so Congress meant for more than that to happen. Certainly I would expect that there would be actual face-to-face or more direct back and forth between the regulators and market participants of all sides, data producers, data consumers, the MSRB, as I noted at the end, because the SEC is writing this rule and then the MSRB has to make it work. We would hope that there would be significant interaction between the SEC and the MSRB during the course of this process to make sure what it is the SEC produces will actually be something that works in the systems that exist in the marketplace today. There's a very clear statement that the Tower Amendment still applies, and that's an important point when it comes to the question of the content. The SEC and MSRB have no additional content rights, rights to dictate content today than they did a year ago. And then again, unlike other regulators who have some more explicit effective date requirements for their data standards, the effective dates aren't specifically mandated for purposes of municipal market rollout. And so tied in with everything else, there would appear to be significant discretion on the part of the regulators as to the timing for the effectiveness, whether they stage it by different types of entities, different types of submissions, whatever it may be. There seems to be plenty of room in the statute to allow for that kind of staging of the rollout. Last thing I'll just mention very briefly is that semi-annual, on the next slide, the semi-annual report to Congress It is extremely useful and it's available on the website. And I think that report is a hyperlink. So if you have access to the actual slide deck, you should be able to link to it. It's a very useful listing of all the existing corporate mutual fund filings that are done using structured data. It's for the rest of the elements that are required. It really serves more as a kind of introduction to the question of cost and benefits to investors. It doesn't say a lot on its face, although it does have a lot of footnotes and a lot of cross references to existing studies in the marketplace about the potential benefits and costs of use of structured data. There's a very general discussion about how the SEC has used structured data in their enforcement process, as well as how they use it for regulatory purposes. This report is required every 6 months for the next few years. So it's hoped that over time, there'll be more a deeper dive, more granular look at some of these other issues that they just introduced. Another thing that the SEC was mandated to do, although I haven't seen anything publicly yet, is to establish a corporate data quality program. Up till now, from time to time, they will send out a comment letter to a filing saying, hey, you have some structured data issues type of things. Expectations that that program will be expanded to have some structured data specific processes that'll be more robust over time as they move forward. So with that, I will hand it over to Michelle.
Great, thank you. Thanks, Ernie, and thanks, Liz and NFMA for inviting me to speak at this today. And all obviously for covering this really important topic. So I'm gonna move pretty quickly through this. You know, as Liz explained, I'm with a nonprofit data standards organization. We're called XBRL US, which stands for Extensible Business Reporting Language. And our mission really is to advocate for the use of data standards where they can improve the efficiency of reporting. And as noted in the description of the session, we're going to take a little bit of time right now to walk through some of the common terms that you hear in the Fdta legislation that relate specifically to data standards. So Ernie talked about a lot of these. I'll just go through them quickly. Things like including common identifiers, open and non-proprietary, able to render data searchable and machine readable, financial reporting requirements documented in machine readable taxonomies, and developed and maintained by voluntary consensus standards bodies and consistent with applicable accounting and reporting principles. So a lot of terminology in there that we're going to try to dig through right now and give you a few more insights into. So if we go to the next slide. Okay, so first let's talk about the terms open and non-proprietary. And let's talk about the implications of something that's open and non-proprietary versus something that is not open and that is proprietary. So open can be defined as something that can be freely used, can be reused and distributed by anybody, not subject to the management of a commercial entity. And that means no licensing fees. So that means that it's something that's freely available to use. This is really important because using open non-proprietary standards, both for identifiers as well as for data standards, means that it keeps the cost low for everyone. So I'm going to talk through on this little table here a couple of examples of things like identifiers. We'll focus on that first. And the first row talks about identifiers, which can uniquely identify a legal entity, which could be a company, it could be a government entity. And the purpose of an identifier is to help you better understand the business risk, and or the investment risk associated with that entity. So the legal entity identifier, or the LEI, which you see there, is an open standard. It is maintained by a global nonprofit organization called the Global LEI Foundation. There are no fees associated with using the LEI. When you look at the right-hand column here for the commercial proprietary standards, you see something like the DUNS number. The DUNS number is very commonly used, but it is a proprietary identifier. It's owned and maintained by Dun & Bradstreet. Therefore, it's subject to the business plans of that company, and there are fees associated with using the DUNS number. Next on the same row is securities identifiers. And I saw that Corby Deer posted some information into the chat about identifiers, about securities identifiers, which I think were very helpful. A securities identifier can also be non-proprietary or it can be proprietary. And there is an identifier called the FIGI, the Financial Industry Global Identifier, which is currently maintained by Object Management Group. It was originally developed by Bloomberg, but it's now really owned and maintained by OMG, which is, again, a global nonprofit standards organization. And it is freely available, freely used by anybody. The QSIP, which you see in the proprietary category, is also a very commonly used securities identifier. I think most governments use it when they submit data to MSRB, to the EMA system. It is owned by the American Bankers Association and is maintained by FactSet. FactSet is a commercial organization, and the QSIP is global, it's widely used, but because it's maintained by a commercial entity, there are fees associated with the use of the securities identifier. And the last identifier I wanted to mention, which some of you may be hearing more about, is something called the UEI, or Unique Entity Identifier. This is a entity identifier that was developed by the United States General Services Administration, and it's for entities that get federal grants funding. And it is non-proprietary, it is freely available. However, it is not a global standard. And last on the row here is financial reporting standards, and extensible business reporting language, or XBRL, is an open and non-proprietary standard. So that's kind of the difference between open and non-open standards. But there are other things that the Fdta agencies will need to take a look at and consider as they begin implementing the Fdta. So is it a standard that's widely used? A standard is really not a standard if there are very few entities actually using it. Is it global? Is it used by other regulators? Data that's prepared using the same standards, the same entity identifiers, securities identifiers, the same data standards, is interoperable. And that means that if the data that's prepared from public companies, from governments, from utilities, from other entities are all prepared using the same types of identifiers and the same types of data standards, then the data can be commingled, it can be shared and used in the same database and in the same applications. So the whole concept of interoperability enables economies of scale, and it makes it a lot less expensive to both prepare the data, to collect the data, and to analyze the information for everyone accessing it. If we go to the next slide. So the next term that I want to describe is machine readable. And most of us are accustomed to working with paper-based documents like PDF files. What you see on your screen here is the PDF financial statement for Flint, Michigan's annual comprehensive financial report. Now, it is an electronic document, and of course, there are PDF documents where you could perform a text search within the document. But a PDF document does not provide access to machine-readable data. Digital machine-readable data is a fact that can be consistently, unambiguously communicated from one computer to another computer with no loss in meaning and with complete and consistent understanding of the data that's being conveyed. We go to the next slide. So here we're looking at a fact like this value, 29,582,214. Okay, when this is stored in a computer, the owner of whoever is storing it obviously understands exactly what it represents. But if that fact is transported to another computer on its own, it has no meaning to the receiving computer, unless it's accompanied by descriptive information that explains exactly what it represents. So if we go to the next slide. So what data standards are really designed to do is to embed descriptive information into the fact itself. So if we look at this visual, we can see that the green bubbles in the visual on the right explain that this value represents revenues from property taxes. It has a data type of monetary. It has a fund type of general fund. It's for has a duration period type and a credit balance. All of that information helps us understand exactly what that data point represents. The information that you see in the blue bubble further explains that this data point was prepared by the city of New York for the period June 30th, 2022, and it's in thousands of US dollars. So when the first computer sends this fact, it embeds the data about the data, the information that's in the green and the blue bubbles, into the fact. And so when computer 2 receives the fact, it understands exactly what the fact represents. The fact can be immediately pulled into a database or an analytical application, and that fact is now fully machine readable. That's what a data standard does. That's what XBRL does. If we can go to the next slide. So here again, we're looking at the same fact as reported in a financial statement. This is the City of New York's governmental fund statement of revenues, expenditures, and changes in fund balances. We can look at the rows and column headers. We can look at the caption on the top of the table, and we can understand the meaning of the fact, just like the information that we had in the green and the blue bubbles in the previous slide. We'll go to the next slide. So here we're seeing the same table, and we're showing the data about the data in the green boxes and the blue boxes. This descriptive information ensures that we have a complete understanding of the fact 29,582,214, with or without seeing the table that it resides in. A data standard provides the structure of that data about the data that has to be provided in order for us to fully understand what the fact represents. We go to the next slide, please. So another term that we heard in the Fdta language is taxonomy. And a taxonomy is just a way of classifying information. You know, I'm sure you've heard this term in high school biology classes. It's a way of classifying animals or classifying plants. And a data standard taxonomy is a digital dictionary of terms that represents the semantic data model. And on the bottom part of this image here, you can see the definition of semantic data model as defined by Gartner is a method of organizing data that reflects the basic meaning of the data items and the relationships among them. This organization makes it easier to develop application programs and to maintain the consistency of data when it's updated. So what a taxonomy or digital dictionary represents is what can be reported. For example, in a balance sheet, you're allowed to report items that represent assets and liabilities. So a digital dictionary of terms representing a balance sheet might contain hundreds of different items that could be reported on a balance sheet. The reporting entity may choose to report 20 of those items on his or her specific balance sheet. The taxonomy also represents how the data should be presented. You know, we know that on a balance sheet, we typically see assets first, followed by liabilities, then by equities. This is how the data should be presented, and this common presentation is incorporated into the taxonomy. And last, the taxonomy represents how the data relates to other data. There are lots of relationships in reported information. With the balance sheet example, again, we know that current assets and non-current assets add up to total assets. So that's a mathematical relationship that's also included in the taxonomy. So we go to the next slide. So here what we're looking at is the portion of a taxonomy that was created to represent the annual comprehensive financial report. This is a taxonomy that was created by XBRL, worked with a whole bunch of different organizations. And this particular piece of the taxonomy describes the governmental funds, revenues, expenditures, and changes in fund balance. So we can see in this little kind of clip here from the taxonomy, on the left side is the presentation of the income statement. So on the top of the taxonomy, we see all the possible column headers that might be on an income statement. So there's general fund, which is highlighted in the red box. There's also things like aggregate non-major or total governmental funds. And below that, we see the various line items that could potentially be reported on the income statement, starting with revenues. Revenues from property taxes is highlighted in the red box. And then on the right side of the visual, we see all the properties of the concept revenue from property taxes. These properties of the concept are included in the taxonomy to help further distinguish and describe that particular type of fact. So a fact reported for property tax revenue would have a computer readable name. It would have a data type of monetary, a period type of duration, and a credit balance. It also has labels, a standard label, which is what might appear on the statement itself. It has a documentation label, which is essentially a definition. And then it also might have authoritative references. Like here we see a Michigan reference, state of Michigan, but it could also have a reference from the GASB. So this is what's encompassed in a taxonomy. So if we go to the next slide. So the taxonomy that I was showing to you on the last slide is part of a larger taxonomy that XBRL created to represent 7 different financial statements in the annual comprehensive financial report. So just quickly going through this visual here, if you start with the middle column, which is the longest one that you see on the slide, we created a set of standards that represent statements for government-wide, governmental funds, proprietary fund statements for general purpose governments. We also created standards to represent a handful of notes: pension, OPEB, capital assets, and long-term debt. We created some state-specific elements for Michigan because we're working very closely with them on this project. And we also created standards for community colleges, which you see on the left side of the screen here. The taxonomy is very much modular. That's the way it's structured. It can be very easily expanded to cover different special districts, different states, if they have state-specific taxonomies that need to be incorporated. And right now, my organization is in the process of expanding the taxonomy to represent a handful of special districts, including school districts, fire districts, hospitals, and a couple of other district types. So if we go to the next slide. So how might this work for government reporting? You know, we all know that government reporting is pretty complex. There are a lot of challenges. There are multiple statements. The financial statements just in general vary. There are different government types. There is more than one accounting standard. There's GASB, but there's also state standards. And there are also even special district standards. Some governments have unique line items. And we also know that there are lots of very small governments with limited resources. So the data preparation has to be very affordable and easy to do. So how can this be handled? If we go to the next slide. The SEC, as I think Ernie mentioned earlier, they require reporting of public company financial statements in XBRL format. So they had a lot of similar challenges. They had multiple statements for public companies. And so what they did is they created separate data models for each statement. So there's a cash flow statement, income statement, balance sheet, classified and unclassified. Financial statements vary from company to company. So companies were required to represent the data in the way that it's reported on paper. Companies can also report non-GAAP facts. So a lot of things that are kind of outside of the norm in terms of the GASB or FASB rather accounting standards. So non-GAAP elements were added to the taxonomy. There were lots of different industry types, just in the same way that governments have special districts and general purpose governments. Companies can vary from technology companies to construction companies to manufacturing companies to financial institutions. And what the SEC did is to create different entry points for different types of companies. So you could kind of go into one entry point and get the elements that were most relevant to your particular type of organization. Some entities also have very unique line items. And so the SEC used an XBRL feature to allow custom line items. So there are lots of things that they had to do to make this feasible and workable for public companies, but they were able to do it effectively, and companies have been reporting that way since 2009. We go to the next slide. So I'm just going to move through this real quickly. This is how governments prepare, or I'm sorry, this is how public companies today prepare and report. They follow a taxonomy developed by the Financial Accounting Standards Board. They prepare their document using one of many different applications that are either open source or commercially available. They reference the taxonomy. They submit the data to the SEC's EDGAR system, which is kind of akin to the MSRB's EMMA system. And then that data is made available to the general public, to investors, to policy setters, to anyone who has access to or is interested in receiving the information. We go to the next slide. A process very similar to this could be adopted by the SEC for municipal bond issuer reporting. As you see on the bottom row, the flow that you see on the top row could be really replicated with government entities. They could use the Governmental Accounting Standards Board taxonomy, maintained by the GASB. There could be state-specific taxonomies kind of layered on top of the GASB taxonomy to prepare financials, submit that to the MSRB's EMMA system, and then the MSRB can make that information available to the general public. So let me go to the last slide here. And let's talk about what we know and what we don't know. And Ernie touched on a lot of this in his opening comments. We know the governments that have outstanding municipal securities will need to comply. We know there's no change in what governments will be required to disclose. However, there will be a change, excuse me, in how data is reported to the EMMA system, how that's formatted. What we don't know is what data standards will be adopted, what legal entity identifiers and securities identifiers will be adopted. We don't know what disclosure documents will be required to be reported using data standards, or who will own and build the taxonomies. We don't know what it will cost and who will bear the cost. We don't know how the rollout will happen, but we can take some lessons learned from what the SEC has done in the past and use that to help ourselves get prepared going forward. So with that, I'm going to turn it back over to Liz.
Excellent. Thank you both. So we're going to go to some Q&A, and we have a few questions that have come in. So while we're talking about those, if you have other questions, please feel free to type them into the Q&A box. So let me direct this first one to you, Ernie. So what will be the penalty for failure to comply with the Fdta?
Well, so I guess one, we'll have to wait and see what the regulations are. But basically, it's going to be a process of using a data standard. And so again, depending how it rolls out, there'll be one layer where, depending how the MSRB puts its systems in place to receive submissions, there could be, in theory, an ability to submit in a way that's not compliant. So that if you don't at all, for example, if you try to submit a PDF document and the requirement is to submit information through XBRL, process, the system may not accept. Two, for example, and this is what part of the data quality piece of the corporate, the SEC, semi-annual report is around. Someone could, for example, report information, but do a poor job in labeling the data in the process. That's going to be an interesting question. And I think there are issues that the SEC is going to have to resolve, and it'll matter who the submitter is and what rules apply to them. So a broker dealer, a municipal advisor, if, for example, the registration process becomes subject to structured data, and they don't comply, there could be a regulatory failure, and you can have a rule violation and the typical enforcement action that occurs if you don't follow the rules that are required. In the context of an issuer or an obligated person who is submitting the disclosure document, you're not going to have an MSRB rule saying, oh, you violated our rule to have this piece of disclosure done properly, because MSRB can't write a rule about what an issuer can do. You do have the potential liability issue under the typical anti-fraud rules, 10b-5. And this is an issue that was broached in the corporate rollout, but in a slightly different context, because when the corporates first rolled out, maybe 15 years ago, however long ago it was, there was a dual submission process, a paper version plus an XBRL version. And there was some discussion about what if the two don't comply with each other. And the SEC was able to speak to the question to that. I think the point that the paper version would apply. I don't see that being how it works going forward. So there will be questions around what if you tagged something that should have been a plus and it's a minus, and it goes through the systems, and third parties digest your data on an automated basis, and it goes out to the world, and now the world has a misunderstanding of your financials. What could potential liability be? I don't have a definitive answer. I think there's be some things that are worth discussing with the during the rulemaking process to press the regulators onto what their views are on potential liabilities there. So that's one of the unknowns is what the liabilities could in theory be in that context. Now, to some extent, it gets protection if for example, inline XBRL is used, because then you do have kind of the parallel of what existed when the SEC first rolled out XBRL, which is a readable version, and then the extractable data from that. And so in that sense, it would be the same as you'd have that protection saying, oh, here's a version that tells you what it meant. Oh, we somehow tagged it incorrectly. There are issues to be worked out there, and I don't think we have an answer there. I think that's an area people need to go through. So I think it's hard to answer that question until we see what comes out from the regulators.
Great, thank you. Michelle, let me direct this one to you. It's a question about LEIs. So it's basically who would they apply to? Would it apply to obligors? Would it apply to conduit issuers, et cetera?
I would assume that the LEI should apply to the bond issuer. That may be a better question for Ernie, actually.
Let me jump in. I mean, there's two things. What is the minimum required by the statute? And then what do the regulators ultimately do? And when you look at the language of the statute, it talks about the legal identity identifier for all entities required to report. And so in theory, if an issuer is required to report, it's their LEI. If a dealer or MA is required to report, their LEI. We don't know if the regulators will say, oh, and by the way, if you have a conduit offering with 3 different obligors, you need to identify each obligor or other parties in the transaction. That's an open question. Statutorily, the requirement for the legal entity identifier is tied to the entity reporting.
Great, thank you. So Michelle, there's a question here about taxonomy development and really about how long it took to develop the taxonomy for public companies. But maybe this is a good opportunity to talk a little bit about taxonomy development more broadly. So, who's involved? How does it happen? Do regulators, sit in a room and decide, which elements should be in the taxonomy? Maybe just give our audience a feel for taxonomy development and then address the issue of how long they generally take.
Sure. And I can, I can kind of use the public company US GAAP taxonomy as an example. It was initially created through a volunteer group, kind of much the same way that we've started creating the Act for taxonomy today. And it was a volunteer group that was comprised of, securities analysts and public companies and software providers and technologists. And actually a lot of accounting firms were very involved in building the initial US GAAP taxonomy, which was built by volunteers. So it was relatively small and not hugely sophisticated. And then the SEC decided that, hey, this is something that they wanted to really focus on. So they conducted a voluntary filing program over a number of years, and just to kind of test it out and to see how it worked. They got some people to some samples, some sample instance documents so they could see how effective it was. And then finally they said, okay, let's put a stake in the ground. We're going to make a rule out of this. So we want to really build out that taxonomy and make it real. And so they basically put out an RFP. They hired an organization, which happened to be my organization. And we built the taxonomy with a large group of accountants and technologists and software providers, probably over a period of about a year, kind of establishing, creating, kind of fleshing it out and making it sort of commercial ready. And then that taxonomy was ultimately transitioned over to the FASB, so the Financial Accounting Standards Board, which is the public company counterpart to the GASB. They took on the ongoing maintenance and support of that taxonomy. So that's kind of how that process played out. So very much the SEC relied on the accountants and the accounting standard setters to develop and continue implementing that taxonomy. So it's not like the SEC, they understand that they don't have that internal expertise, and they wouldn't take it upon themselves to do that. And right now, what the FASB does is, as they have a new accounting standard that is in process, the XBRL team within FASB looks at it, models it into the taxonomy, and then kind of presents it at the same time as a new accounting standard. And there are different ways of creating taxonomies. The FDIC, for example, they have their own taxonomy for bank reporting. They created that on their own because they were also kind of the standards organization, the accounting standards organization. The Federal Energy Regulatory Commission, similarly, they created it on their own. They brought in some technologists to build it on the taxonomy side, but because they kind of owned that accounting standard, they developed it themselves internally. So, I would anticipate that in this scenario, they're going to look to the accounting standard setters. The GASB, I would think, would be a key player in all of this, and MSRB certainly as the conduit, and also because MSRB maintains a lot of content that is not GASB, and that also may be required to be in standardized form. So, and also the states, each state may have their own standards. So that's going to be part of the process as well.
if I can jump in and add one thing, and I think you see it with the SEC rules today as well. Although the vast majority of this is aimed towards financial information, there are certain requirements that are not kind of the typical financial information. And so I think, for example, the commission has a couple of taxonomies that are separate and specific for particular types of filings. And
That's
so
right.
depending on what ultimately this all gets applied to, you may have those core financial statement type of taxonomies, but may have to have developed what I'll call mini taxonomies for particular applications in particular purposes. And those might be more of an in-house. I can't speak for the regulators, but could be more of an in-house process.
That's right. That's right. I mean, when a public company reports, and I apologize, there's some construction going on near me. When a public company reports, they may access multiple taxonomies simultaneously because they may pull up like one for document entity information, one for currencies, and another one for the US GAAP financial statement elements, and they can kind of combine those together and work on them within the same document. So similarly with state reporting, somebody in the state of New York may pull up a New York layer of elements, that taxonomy plus a GASB taxonomy, and use them together to prepare their financial statements.
And I think both of your comments really help us with these next couple of questions. So one of them is, would it be possible for all municipal filers to use a single taxonomy, or would we need separate ones in different sectors, et cetera? And I think, Ernie, your slide that shows the breadth of information currently required to be submitted to the MSRB is a good indication that it's unlikely that a single taxonomy would cover all those, or would need to. And some of those could be amenable to a very structured form, for example, that a user fills out. And others need to be more customized, like a financial reporting taxonomy where, folks are reporting different things, and you need to have elements in the taxonomy that accommodate a lot of different types of reporting entities. But any additional thoughts on that, Ernie?
No, I mean, and there's a trade-off of having it all in one big document that is difficult to navigate and find things, versus saying, well, a little bit like the entry points Michelle mentioned earlier on. It may make sense at the end of the day to say, here's taxonomy for X, here's taxonomy for Y, and then make it separate. And I think that's something that's going to be, they'll figure out as they go forward, is my guess as to what makes most sense.
Yeah, I agree. I think financial taxonomies are pretty big umbrellas. A GASB taxonomy can be a pretty big umbrella and cover a lot of things. But, a quarterly report that a municipal advisor files reporting their political contributions is a very different type of report, and maybe amenable to a very structured type of form. So, those, I think, the SEC will work through, those kinds of complexities and try to figure out what makes sense. And then, as Michelle's discussed, probably turn over development of those more complex taxonomies to the working groups that have the domain expertise. So let's take this. I think we have time for one last question. So, Michelle, let me start with you on this one. So given that the Fdta talks about not changing disclosure requirement, will taxonomies have to be completely customizable for reporting entities?
Right. I mean, that's a really good question. And obviously the whole idea of standards is consistency. But there are lots of reporting domains where, financial statements are, can vary dramatically. And there are ways to accommodate custom elements, custom line items that one entity may have that frankly no one else has, by requiring those to kind of roll up to higher level items. Like if something is a current asset, it can roll up to the total of current assets. So there are ways of doing that and allowing governments to report unique line items, but still make it consistent perhaps at a higher level. So the child element may be something that's custom that isn't comparable, although you can look at it as a time series over time, which can also be useful even for a custom element, but the higher level elements would be comparable across entities.
And if I can quickly add, under the SEC's implementation, there actually is in essence an obligation that if one of the existing tags does not properly characterize what your item is, you actually do need to create a custom tag for that particular item. The question is how much control you have, and part of the data quality issue is, do people sometimes go wild with custom tags? And so there's a push-pull to that, but there actually isn't, there's recognition that any taxonomy is not going to have every single thing that every single user thinks is appropriate to characterize the information providing. And when it doesn't have it, it's your duty to create a tag that's appropriate for your particular item.
Right.
Yeah.
And initially with the SEC program, there were some companies that had 50% of extensions, like custom items, because they really weren't digging deeply enough into the taxonomy. They didn't understand it. But that number has declined dramatically over time. And also the taxonomy is revised every year. So there's an opportunity to look at, like, what are companies extending, or what would governments use as custom elements, because there may be commonalities that can be established and, and then incorporate those back into the base taxonomy.
So it's a living, breathing process that we're all going to learn from over the next few years as we watch it roll out. But hopefully we won't be watching. Again, I think it's really important for our user community to be really engaged with this, because I think it's going to be really critical to the outcomes. So thank you again, everybody. It's been a pleasure. And I want to thank the panelists again, Ernie and Michelle, for a great job. And thank you again to the NFMA.